Hi there, this is the Option Pit video blog. Reminder, this is for educational purposes only. This should not be construed as investment advice. Seek consultation from your investment advisor if you are thinking about doing anything I talk about. You lose money, it is your fault. Now, I'm Mark Sebastian, I'm the founder of OptionPit.com. Let's look at the market. Well, the first thing I want to talk about is Apple. All right. And we're going to start by looking at Apple Vol, AAPL, and this is the VIX of Apple options. All right, this may not be one that you're used to seeing very often, but this is one that I follow because it really follows volatility. And what I want you to notice is if you really look, other than back in January when they were talking about splitting the company up for earnings, this was the highest volatility of earnings we've seen in some time. Some of the earnings have been anticipating as little as a 4% move. All right, looking at Apple itself, one can see these different earnings dates. All right, and I can pull up live vol X's volatility, and you get another view of how high that volatility got. All right, up near 38%, a pretty decent show of volatility. Probably related to yesterday's sell-off. If we come in, you can see that today and yesterday, a couple of ugly days of trading. So what did that lead us to? Well, let's look at the money, and what you'll notice is that that straddle, so the one, really they call it the 114, 115 strangle, went out about $7 plus the 50 cents in between. So it was about a $7.50 expected move. All right, well now if I pull up the stock, you can see where it actually is trading. It's trading around 118 bucks. Now they have not had their conference call yet, but it certainly looks like it's trading a little bit higher, but not with the gusto of that upside of the straddle. The straddle was predicting Apple could move up to 122 or as low as 107, and right now it's barely up $4. So a small move relative to what the straddle was predicting. Here at Option Pit, we spent a little time looking today at trades, and the trade we kind of came up with was a small broken wing butterfly. It's just obviously a tiny little trade, just for the fun of it. And we were looking at the 109, 107, 105 with the idea being 1 by 3 by 2. So not really broken wing, a 1 by 3 by 2. It's kind of a play on how one might look at earnings, as a way to play. This trade was done at a 25-cent credit. Well, with the rally, it's looking like, if I pull up the risk chart, it's looking like I'm not going to be making a lot off of this trade. But with the volatility in 30%, looking at tomorrow's date, and the stock around 119, I will have collected what amounts to all of the premium in that one lot. So I will probably be looking to close. Now, for some reason I get lucky and Apple turns around and does drop 4%, I'm going to be, 2 to 4%, I'm going to be pretty happy. All right. Now, obviously, I'm hoping if the volatility drops more, drops enough, I'm going to do great. So, just a quick look at how we look at earnings and how we approached them this time, and kind of how the market was perceiving earnings and what Apple is actually doing. Okay, folks, well, again, this was for educational purposes. If you're interested in learning about Option Pit, you can go to optionpit.com /option income, and you can take our 45-minute debit and credit spreads course for just $12. Really simple, really easy, and worth the look. All right, if you got questions, feel free to email me, mark@optionpit.com, or you can call me 888-TRADE-01. Have a good evening.